Rob, yesterday we were in the red for most of the day. We chatted yesterday at lunchtime, the market looking pretty dismal. We saw that late turnaround though yesterday afternoon, so we ended positive, though we had the Dow last night closing over 1% weaker. So seeing still some of that pressure coming through in these markets.
Yes, obviously we had some good buying into the end of the afternoon yesterday. We saw a lot of the support lines actually hold yesterday and it looked very positive. We saw the Dow open positive as well, but I think the story with BP later into the evening could put pressure on the Dow Jones, and there was quite an aggressive sell-off near the end of the day, and we followed suit this morning as well. So yeah, a lot of volatility still in the markets, but we start to see some buying coming back later this morning. So the market looking a little bit better already.
Of course, we saw those BP shares yesterday coming under huge pressure in the US. Of course, this is a share that's fallen sharply over the past month. Yesterday when we chatted, it was already down 25%. It's now facing criminal charges or potential criminal charges in the US. Why is this being felt in the broader market though, Rob?
It's difficult to tell. I mean, obviously it's specific just to BP, but every time they are a very large company and as their stock is hit, it's now down 34%. It does start to impact at some of the indexes, and even though it's specific to maybe one index, the market is at such a nervous level around the world that people sell off. As soon as they start to see some negativity, they start to follow suit. So the market is just very worried generally about the global economy.
Of course, we had that Chinese PMI number out yesterday morning, which put pressure on the Asian markets. But that was followed through yesterday evening with better than expected ISM data out of the United States, which shows their manufacturing sector is still growing at a rate of about 60% year on year. So, I mean, that was quite, the index came through at 60 year on year. So, I mean, that was quite positive. Do you think that was still being ignored by the markets? It's really not focusing on the fundamentals, but rather focusing on any negative news that does come through?
Well, there seems to be a fight between the sentiment in the market and the fundamentals coming through. On the fundamental side, the PMI numbers are looking very, very good across the board. Although it is slightly less in China, they're still 15 months, consecutive months growing. And we saw that the Japanese PMI number was better than expected. Europe was, the UK was the same. And then again, the USA came through with very good numbers. So the fundamentals there are pointing to an economy that is still in recovery and still doing relatively well. But the sentiment around the sovereign debt issues in Europe is a problem. And there's a fight-off between the sentiment and what's going to happen in Europe to the fundamentals that are coming through on the numbers. If we take a look a few months ago, when the market was rallying very high, the numbers weren't quite there on the fundamental side, but the market was expecting really good numbers. So who is right? Is the market now correct to saying, well, this follow-through is not going to be there for the next 2 or 3 months, and the earnings are going to start to waver, or the fundamentals going to follow through? So it's quite a lot of tension in the market, and we're going to see who wins there and who's proved right between the fundamentals and the sentiment in the market.
Well, you mentioned some of those support lines that we crossed below yesterday afternoon. Did we cross back above those again today, and where are we sitting at the moment? Are we still in dangerous territory here?
Well, there's a very big level of 29,350 on the Aussie, which we went through quite aggressively yesterday. But we managed to claw our way back and go through that, and we're still staying quite a bit above that today. Even in the lows of today, we are still quite a few hundred points above that. I think if we can stay above 29,350 on the Aussie, we probably can see a break up to about 24,900.
Of course, we had numbers out from Peregrine, full year numbers out this morning, and it shows that some companies are really benefiting from the volatility that we've been seeing on the markets recently. Full year headline earnings per share up 267%, basic earnings per share up 128%. Did you have a look at those numbers, Rob?
Briefly taking a look at the numbers, they are very good numbers. A lot of the money they made is from proprietary trading themselves. They put their own money into their hedge funds, and the hedge funds have performed very well. I think one or two of the hedge funds made 135 million for the bank. So a lot of it is from trading in the market. So on the trading side, they're looking really firm. On the brokerage side, and Peregrine Securities slightly under pressure, and that's with volumes over the year. But all in all, they're looking relatively solid. Citadel seems to have pulled itself back together, and they've increased in the number of the amount of money that they have under management as well. So a good solid set of results, but a lot of those numbers coming from trading activities.
Well, we had vehicle sales figures released this morning, and that's the numbers for May. 35.3% growth year on year. So it looks like this momentum that's been building from the beginning of the year is continuing, Rob.
Yes, another good number out for our economy. It just shows you that the economy is still recovering. Vehicle sales are very important to the economy. It creates jobs across a broad variety of industries. people making parts for the cars as well. So a good number. We needed that number to continue. Obviously coming off a very low base, but a positive number and showing that there is still recovery, and hopefully that automobile recovery also brings in new jobs and reduces unemployment.
Of course, jobs is also going to be the focus in the United States. On Friday, we get those non-farm payroll numbers out. Do you think that if we get good numbers there, then the markets could start focusing on the fundamentals again rather than just the negative news?
I think so. I think they're looking for quite a big number. I think 531,000 jobs to be created there, from 290,000 the previous month. So they're looking for quite a big jump in those numbers. So it is something that the market's looking at closely. And the one thing that in the fundamentals and all these good PMI numbers that are coming through from all the different countries around the world, the number that isn't coming through is a reduction in unemployment. And we really need to see a reduction in unemployment, so we'll be looking very closely at those non-farm payroll numbers on Friday.
Rob, we have to leave it there. Thanks very much for your time today.